All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, do me a huge favor, drop me a one in the chat. Let me know you're here with me. I had a couple issues getting the YouTube side started this morning. So I see the ones coming in. Okay, we are good to go. I appreciate everybody's patience. So let's make sure that we start out right each and every day, each and every week, month, quarter, year, right? With a strong foundation, taking massive action, making sure that we're accepting all possible losses before entering a trade, preparing us for any outcome. Let's make sure that we center ourselves in mind and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. And we always want to imagine our trade successfully materializing and that we are obeying our trading strategy, avoiding decisions based on greed or fear. And we ultimately never, ever want to look back or stop once our trade has commenced, right? So I hope everybody is excited and ready to go for a new week in the market as we have marched right on into November, right? Which for the market overall is typically pretty good. Taking a look first at trading economics, right? Front page German investor morale disappoints. So the ZU indicator of economic sentiment for Germany fell to 7.4 in November from 13.1, right? Man, it's almost in half. In October, well below forecast of 13, weighed down by Donald Trump's victory and the collapse of the German government coalition. The assessment of the current economic situation also deteriorated with the current conditions gauge declining to negative 91.4 from 86.9, right? So we know that's important for Germany because it is the largest in the Eurozone, right? And we know morale, sentiment, right, is one of the key fundamental indicators that we like to track and follow in the Forex trade room. So we'll take a look and see how that's playing out on the chart. Bitcoin approaches 90,000, right? Well on its way to 100,000. Again, can't get a shout out enough. I know I definitely didn't see it until Joy pointed it out. The huge cup and handle pattern, not on the 15-minute to 30-minute to hour to 4 to daily, but on the weekly chart, Joy spotted that. We'll take a look, and it is moving to the upside. I know some of us have been waiting on a correction, but it has just kept moving to the upside. So moving long, definitely bullish on Bitcoin and other cryptos. There was a guy yesterday that created a meme coin. I forget what it was called. And he wanted to hit a $1 million market cap in like one day, and he actually hit the $1 million market cap. So like 8,000% it increased by. So that's the type of crazy world we're living in right now, right? So again, Bitcoin approaches 90,000. U.S. small business optimism rises in October. All right, that's a positive thing. Indian inflation soars to a one-year high. That's not good. South Africa jobless rate falls to 32.1% in Q3. All right. European shares started to retreat. Started to retreat and move down. And UK wage growth slightly higher than expected, right? So still, that's good for wages, right? But we know that that is one key area that the Bank of England is paying attention to in regards to inflation and ultimately, whether or not to cut rates or to maintain rates. So lots going on, right? So just moving down here, right? For those of you who don't know, right, you can always go down here and get a real good snapshot of your countries in regards to the fundamentals overall, right? So we can see here, a lot of people, the economy is bad. The economy is bad. The United States, it's not bad. GDP growth is at 2.8%. The inflation rate is down to 2.4, and your jobless rate is at 4%. Stop it, right? So That's where we are there. Moving on to the dollar. The dollar index climbed above 105.6 on Tuesday, reaching its highest level in more than 4 months as Trump trades continue to dominate the financial markets. Expectations of a second Trump presidency, along with the potential Republican sweep of Congress, fueled optimism for deregulation, tax cut. The question is for who, which could boost economic growth and stoke inflation. This, in turn, may limit the Federal Reserve's ability to lower rates. Trump's promises to raise tariffs on key trading partners, especially China and the European Union, as well as his plans to tighten immigration, added to concerns about inflationary pressures. Looking ahead, investors are focused on the latest U.S. inflation data due this week, which will provide further insight into the economic outlook. Additionally, fresh commentary from Federal Reserve officials is expected to guide market expectations. The dollar strengthened broadly, with the euro and the yuan falling to multi-month lows against the greenback. So we have a strong dollar, right? And so we come over and take a look at the DXY. It has exploded to the upside. So we got the pullback to 50% test of this huge bullish candle on the daily, has resistance becoming future support, and we are running long, right? So here we are on the 4 hour. We pushed down, right? So we initially broke out of the consolidation to the downside, but as you can see, we came in here on the 4 hour chart at a 61.8 pullback, huge bullish engulfing candle, and we are rocking and rolling to the upside on the US dollar, right? So that's another ABCD wave looking like it wants to play out. That D extension is at 106.70, and we may get there, right? Here we are on the 1 hour, same thing, right? ABCD waves playing out across the board. Y'all have been with us for a while now. This is the game, right? This is how the market moves, no doubt about it. So we right now have a bullish dollar. Any questions on any of the fundamentals? Nope. All right. Moving over to the Forex factory, right? See what's going on. Yesterday's pretty light, right? Again, bank holiday, Veterans Day. Not too much. We've got today pretty light. We've got some Federal Reserve members speaking, quite 4 of them, right? Speaking today. We've got the wage price index for Australia that could create some volatility later this evening with Australian dollar pairs. And then the big one tomorrow, which is we may not see a ton of action out of the markets today, especially on the stock side, because we got this CPI data for the United States coming out tomorrow. And so tomorrow things start to pick up. We've got even more FOMC members speaking. RBA Governor Bullock is going to speak, and we got more Australian data, employment numbers coming through on Wednesday. So we still start to see some volatility pick up through going into the middle of the week this week. As you can see, Thursday we've got a lot of things in the red, right? So CPI, PPI this week for the United States, which we posted in the community in the blog post that we posted yesterday. So regarding the week ahead. So middle of the week look to get busy in regards to the volatility. All right. So let's look at the charts, right? First of all, we will start out since that's all a rave on social media, on Facebook, people coming out of the woodworks, like, everybody's celebrating the rise of Bitcoin. But since thanks to Joy, we saw it coming, right? So here is the cup and handle pattern, right? You can see the huge cup, there's the handle, and there is the breakout, right? So that looks like it's going to be well on to 100,000 sooner or later, right? On this Bitcoin play. So we come here to the daily, right? We understand that. Remember this, everybody, here, like a while ago, right? That 80-20 play when Bitcoin bottomed out, right? So that's how it started out for us as an 80-20. and we see the swing that's occurring, right? So now we're just trying to find the low on this daily. We put a fib there to see where we are running. And we can see that this is our low, and this is just way overextended, right? We don't even have a new fib set up here on the daily chart. If we move down a few levels to like the 4 to the 1 hour chart, just kind of get an idea of where we may start to see price correct a bit. Try to get a better idea where we may be able to make a play in the near future if you haven't already been involved, right? So you can see how overextended this is. So we'll take this down to the 1. Right, so your 1 hour chart here, you've got a new AB boundary. So if we can get a correction, some relief, and then a move back down to our buy zone, right? At least on this 1 hour chart, that may give us a good opportunity to buy, right? So any further correction may give you an opportunity to get involved, right? On this Bitcoin, on this 1 hour, this 1 hour D extension is at 98,088, right? So let's see if we can get a low price on Bitcoin. This is a 1 hour setup, something to keep an eye on. Any questions on Bitcoin? No. All right. So that's that. What else? Let's take a look at our commodities. See where we are here. So we can see U.S. oil from the daily, right? We've made another push down, got bearish, right? Coming into the support at 67.59, right? We know oil's been a bit all over the place, right? It's been a bit all over the place. So let's see if we form a low here. We've got a stochastic though that's in the sell zone, right? So we want to pay attention to that. But give it a couple days. Let's see. Let's see what happens. Let's come on down to the 1 hour chart. And we're starting to already push back to the upside here. All right. And you can see how it's just moving, right? I really don't want to put a fib on that right now. We'll put one here at this high to see if we've got any type of 80-20 scenario that's turning right off the B boundary. Um, I'm not trading it right now, but if any of you like your shorter term moves, we're back above this 68.69, right? Read some of the oil data. That's looking like a nice move from a 1 hour perspective. We clearly have a trend line break. So if you're looking for a short term play on it and it wants to make its way back higher, right? We're sitting right at that outer trend line. We've got our inner trend line to run through the low like so. Right. So if we get a pullback, maybe a retest of this area, maybe gold, I mean not gold, but oil, right, is setting up to move a little bit higher. Like so, right? Because we don't have anything coming into here and then this high here. Right. So read the fundamentals on it. Let's see, let's go over to commodities. Take a look at crude oil, trade around 60 to barrel Tuesday, holding on the losses from 2-day plunge as the bearish demand outlook continued to weigh the market. China's recent efforts to stimulate its economy fell short of direct intervention, while weak inflation persists, heightening concerns on demand from the world's largest crude importer. Additionally, the rise in the U.S. dollar, right, strong dollar, fueled by President Trump's reelection, has further pressured oil prices by reducing the appeal of dollar-dominated commodities, right? That puts a lot of pressure on commodities because we know we talk about it in this group quite often, how, your commodities around the world are dealt in U.S. dollars, right? So furthermore, the potential resolution of conflicts in the Middle East now appears more plausible, easing some upward pressure on prices. Meanwhile, investors are closely monitoring the global demand outlook for 2025, which an oil surplus anticipated next year. OPEC's monthly market report expected later Tuesday. It is set to offer details, insights into projected market balances, right? That's going to be a key report. So, right, we're getting a pullback right now, maybe a short-term play, but this might be, right, further oil to the downside, right? So a short-term play there. If you can get a pullback and a correction, maybe we move up higher in the zone. I'm just going to leave it on the subject right for now. Try to get a better look at this there, right? So maybe we push higher in that zone. We run into resistance around this area, and maybe it gets back short. Maybe that's going to be the play, right? As we come into this area here. Don't know, but we'll see. We can get that correction back to the upside. Let me back. See if we can get a larger fib to show up. Oh, boy. I don't know if we do because it's been moving, sideways a lot in a big, huge range back and forth. So I don't know. At least on the one, I don't know. Just there we go. All right. So what do we have? An extension pretty much around the same area. So 66.55. So maybe, right? I'm gonna change up on this. That's more of a shorter term day trade on that correction to the upside, but I'm gonna lean, right? Stay bearish, right? Like this. So, I took it back and redraw. But right, maybe come here and see if we get a reaction. We'll move back down. All right, so that's how I'm looking on this 1 hour chart on oil. So I had to change it up a little bit there. Okay. Any questions on oil? Nope. All right. Anybody seeing anything different on oil? Joey, I know you stay read up on oil. What are you thinking?
Actually, I didn't even do nothing yesterday. I didn't know we had the day off, and I returned to my bed and I stayed here. And
Yeah.
I ain't touched not an electronic in this house.
For sure, for sure. Yeah, it was Veterans Day yesterday, but that the bond markets were closed. And your banks closed. Stock market was still doing this thing
But
yesterday.
the report come out today, don't it?
Yep,
Yep.
yep, yeah, the OPEC report. So we'll see. That what I was just reading. Though, that's what kind of got me thinking. Like, not even thinking about a shorter term day trade to the upside. Just wait to see if we get a high price and get short after I read that. So we'll see how it plays out. That's a lot to deal with. So, but sometimes as when you get it, moving across the middle of your screen and it's choppy, and you drop a fib on it. Hey, it's still within the Fibonacci framework, to the downside. So with all the back and forth and the moving back and forth, it's still structured to the downside right now. So we'll see what happens. the fundamentals kind of align with it moving to the downside.
Now, Benny, from last week, all I know is a lot of people are setting up for. They kept saying positioning. Positioning was the word last week. So I think while prices is low, I think a lot of people is just grabbing and holding. That's why I was like, over
Yeah.
the next 15 days, it's probably just going to be stagnant till after elections and stuff.
Yeah, yeah. But usually, so for the most part, but we'll look at some things here on the indices and stuff. There should be a correction coming. All after all of the hype kind of wears off. Technically, it looks like there's going to be a correction soon because all of those upside price targets that we set on these indices, they're all getting hit. They're all getting hit, and they're not just lower time frames, but these are higher time frame extensions that are being hit. So at some point, right, at some point, we may see a correction. Um, but we do have the holidays for our stocks and things like that. We do have the holidays coming up. November, December are typically good for the stock market. So it's January, February kind of falls off, and then March and April things kind of pick back up historically. So we shall see. Wild things can happen in an election, right? So we'll see if those, see if it still holds true in regards to stock market patterns this year. But there we are on oil. Here is the gold, right? So we know on a daily we hit that 80-20 zone. We were really focused in on this 25.99 level, right? Is where we saw the reaction and the push higher to that 80-20 zone before on the daily. Yesterday we had another bearish day for gold. Okay, we got we've had a good run all of 2024. And hey, we're in regards to the Fibonacci sequence, we hit an 80-20 zone, right? So we know anytime we see that zone hit, a short is possible. So now it's just a matter of where do we hold on this gold play? Do we hold at this level and form another low and move up again? Or do we continue to see declines back to a sweet spot? Well, we know, on gold, we know that with this pair, this gold is pegged against the dollar. We know we've got a strong dollar, right? We know we're risk on in the markets. We take a look at the quant. We know for our risk gauges, we are pretty much risk on, right? As a result, right? So stock market has been doing well all year. You got a lot of optimism regarding, the election results. And so it is just, it's nothing new. It's just continue to make its run, all right, to the target. So we're risk on and the market's got a strong dollar right now. We'll see where that dollar tops off and see when it decides to take a breather. All right. So this is where we are as far as gold. Our stochastic is back in the buy zone, right? So what the question is, do we move back higher? Is it going to be temporary with another drive down? Right. That's the question right now because we've been to this level, right? And so we've actually started to push lower, actually closed slightly below that 25.99 level yesterday. So we may see further declines if we work our way down through the charts. We'll come down to the 1, and this is what we were, get this off, have been tracking. And so we can see that if the sequence holds to the downside here, we're definitely going to move lower, right? 25.70. Okay, that's clean, right? Coming off the top. So you had an 80-20 zone. You've got, I don't even have to draw the trend line, guys. You can see the trend line, clean trend line break, and a move to the downside. So this is a textbook, ABCD wave here, right? With the pullback. So we expect that the extension at 25.70. And then from there, it's just a matter of, do we pull back again when that new fib starts? And then do we hold this zone? And then do we continue to move down, right? That's more so what I'm leaning towards. Is a correction, a de-extension to be hit, a correction, and then a move down, right? We'll see if it holds below that 25.99 by the time it's done, right? So we shall see, right? So eventually right? That D extension is going to get hit at some point. We're going to form a low, and then it's just a matter of how far it wants to move back to see if we can get a down. So we'll see on that. But that's where we are as far as gold right now, to the downside on a correction. So we know that we came into 2024 on gold saying, hey, gold bullish, because we're looking at interest rate cuts and inflation coming down, right? So kind of throws a little wrench in the game because a lot of investors, experts, economic experts see Trump's policies as inflationary, right? So are the Feds going to be able to continue? We know most likely in December we're going to get that 25 basis point cut, but moving into 2025, that's going to be the question, right? In regards to what they can do. They're going to say they're going to stay data dependent, right? We should expect that. And so those inflation numbers, CPI, PPI numbers, those are going to be very, 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 very important, right? In regards to whether or not we continue to see further interest rate cuts, right? We should, unless something drastic happens, immediately with the shift, we should continue to see results for at least the next, in my opinion, the next year, year and a half of what's been going on already with the current administration, right? So you build back better, everything that they've put in place, inflation coming down, right? Because we know inflation has a lagging effect. So even if Trump's policies, right, are seen as inflationary, right, it's lagging. So just like how we didn't feel the grip of inflation for a while and then it hit, and just like how we're not gonna, you know, feel the impact of inflation going down on, on food prices and everything that we buy for a while, right? So we'll move into 2025 and we'll start to see like, wow, prices are getting better over the next year, year and a half, but that's because of what was already put in place a long time ago, right? So any type of inflationary issues, I think it depends on how drastic and how fast the new administration, right? But I'm hoping that at least the next year, year and a half, we can continue to ride off of everything that's been put in place. So Americans can get a bit of a break, right? In regards to prices coming down. So that's where we are on gold. We'll see if that finishes out and hits that extension, which is what I'm thinking. Uh, Taking a look at silver, right? Move this one up to the daily. We know we got that $34 per troy ounce that we're looking to hit on the lower time frames. Now we are correcting, right? Correcting to the downside, right? So we'll see how low that wants to move within our AB boundary on the daily. And our stochastic is in the buy zone. So we'll be patient with that, let that continue to do its thing. But it's moving into a pretty good position from the higher time frame on silver. Moving into that gas, right? This has continued to move. This is the daily chart, right? Look at that huge bullish candle yesterday. So we've been projecting that gas after the correction to continue to move to the upside. And it looks to be doing just that for right now. Stochastic in the buy zone. And we've got this daily fit with a huge bullish engulfing candle, right? So if we drop down to our lower time frames, move to the 4, right? You can see the results of that bullish candle. And now we are looking for some sort of pullback here, right? And a continuation to the upside to hit that sub 50 extension and then to just continue long, right? So bullish on that gas. Okay, so we finally got that trend line break, right? So let's see if we can get a continuation on that. If you missed it, that's okay, because hey, one of the things that we love to do is wait for that trend line break and that pullback, okay, to see if we can get long on this nat gas. Like so. Back. Right, I know, Reese. he uh he's getting it a second time around now, man. It's like, come on now. Like, come on now. We gotta figure this out. this time. We gotta figure this out. They do, because it takes a while. Like when you talk about like uh build back better, all of those huge policies, right? For the funds and things to get allocated for you to start. Nobody builds infrastructure overnight, right? So that takes a while, right? But one of the things that Build Back Better did was like was it Build Back Better or the other? What but the one of the policies actually saved 1.2 million pensions. 600,000 of those were union, Teamsters union pensions, right? That they saved as a result of their policy. But they voted the opposite way. So it is what it is. But like I say, hopefully, if I'm the new administration, I'm gonna coast on these policies for a minute and take all the credit because that's typically what they do, right? I'm gonna take all the credit for it because the American people, we're in a 24-hour news cycle and we forgot what happened yesterday. So all of a sudden the economy is gonna be great, right? It's gonna be great. Soon as January 20th hit, everything's gonna be great. So, but that's the political game. That's the political game. No, they don't read. You don't even have to read these days. You can listen. They don't do that neither. But that's neither here nor there now, right? So that's where we are. Moving over to commodities, right? But a lot of people don't follow markets either. They don't follow markets like we do every day. So sometimes it's hard to see that, right? I tend to just stick to the data. Like, what does the data say, right? Because this S&P, everybody hit 5,900. So from an investor perspective, this economy is not bad at all. You just broke it. You just broke a high, like 5,900, right? 6,000. Stop it. Stop the mess, right? So this is what I mean by like some of my positions. I'm looking at these, right? Uh, like we've got higher time frame extensions hit. At some point, we're gonna see a correction. Now the question is how much momentum, especially we're moving this, into December holiday season, things like that. How much momentum does the market really have? Because we've hit an extension. So the question is, do we form a high, right? Uh Here we go. If we form a high around here, do we retest 5,900 and then get a bounce, up to a daily 80-20 zone at 62.89, for example? Do we push lower to 58.14 into 236 and retest 57.85 area and bounce, or are we gonna see a deeper correction? That's the question, right? That's the question. So I'm holding some of my positions, but being a technician enables you to see, you know, where it might be a good point to get out and wait for the correction. You know, a lot of investors they hold, right? They hold and then they continue. But sometimes as a technician, you can multiply your returns by getting out at those high prices and then waiting for a new go to cash, then wait for a new low price and then reinvest, right? So that's always the dilemma. But we hit that 5,900 target. We hit that daily extension just like we projected. And now it's just a matter of when the momentum finally slows, how deep of a correction do we need to make? Right. So that's the S&P 500. The US 30, everybody, 4,400, 44,000 hit. We broke that trend line. We hit it, right? We've been spot on, right? And so this is what I mean. Like across the board, we're starting to get higher time frame extensions being hit. Our stochastics are way overbought. Interested to see when that correction is going to occur. Here's your NASDAQ 100, right? We're closing in on that 21.6. Spot on, 21.6. Okay, so we'll see if we can get there this week on the NASDAQ. The Nikkei, right? We had another finish out. This is the 4-hour chart on the Nikkei 225, and now we're in the middle of a new run, right? We're kind of ranging right now, retesting this level, but we will see, right? That's the 4-hour chart. See if we can get a continued move to the upside. Okay, so that wave completed. Congratulations if you played it. Let's see what happens. Our UK 100, we are still, right, moving to the downside. That 80-20 on this UK 100 played out beautifully. You got 2 TPs, and then we collapsed with the trend, right? So the trend continues to be down on this long term. We're moving to the downside. We got just about a 382 push. Might have been just shy of that, right? And see, so we'll see what happens when we hit this 80-20 zone on this. But the main play we were looking at on this one, once we broke that range and started to move lower, was this 80-20 setup. And that one went. Not sure if anybody played that, but that was a beautiful setup there. Here's our Russell 2000, the forever trade. But hey, great work, right? Great work. Small caps, Russell 2000. Been talking about this for weeks on end. We hit 24.19 extension hit, right? So this is what I mean. That's a daily extension. So this is what I mean by hey, higher time frame extensions being hit. That's telling me something. We may see some relief soon, right? In the market, our German 30 play, right? Choppy, but still trying to move to that target at 19,966. So we'll see what happens with this German 30. We know we got front page today, right? Go back over that German investor morale disappoints. So we'll see if that has any type of impact there. Okay. So that's where we are on the indices. We'll take a look at the Qs, right, in regards to when we look at our ETFs that track some of the indices, and we'll move down to more portfolio that I'm trading, and we can see that the Qs, which tracks the NASDAQ, right, where this is topping out at, right, how we took out this high, like we're up, we're moving. Right. We're hitting some pretty high areas. Okay. And so we want to be, as traders, as technicians, we want to be aware of that. You know, do we hold, you know, through the next run for to make one more correction and another drive up, you know, or do we get out and live to fight another day, right? So we're closing in here on the 4-hour on the Qs, right? We're closing out here. That's 516. We're looking to close out there soon, right? So we're reaching some highs. We have posted on the portfolio, right? This is where we are. So yesterday when we posted in the group, it was like 4,000, 4,600. Now it's up to we're floating 55.89. It had actually hit like 6,000. So it was like 20,000, 120K, but we're just shy of that now. So we'll see what happens when the market's open, right? So our hedges, right, with gold, our defensive ETFs and like gold here, you can see those are in the negative. I'm still, this Aussie CAD trade is still struggling. But you can see on the defensive side, right, where that gold is correcting, that's okay. I just continue to ride that out. But we're still up, you know, pretty good overall. So we'll see if today, if it wants to make one more push, right? This is that ARC play, right? Kathy Woods Tech ETF, right? This is moving pretty good. We got the financial sector ETF moving pretty good, right? That's doing well. SMH is kind of struggling a little bit, SCHD. And then there's IYW, right? That makes sense because that's another tech ETF, right? A little different distribution than ARK, but that one's moving. That one's moving pretty good. Our EEM, which is our emerging market ETF, right? That's down right now because that's gonna be China has a huge impact on that. So that one's struggling, but that's okay, right? We're still up 55.87. So my question is, with being able to look at the technicals, you know, uh, at some point, do you close it out and wait for these corrections to happen? That could be a while, right, to wait. Or do you just hold them when those correction happens, look to add to the position? So some decisions that I have to make there. Any questions on that? No, no, no. Okay. So this one has been going since July, right? Like mid July or something like that when this one started. So it's almost up 20K. Uh so we'll continue to see how it plays out on that one. So that one's going pretty good. So there's the cues. Here's the arc, right? That's just running, right? So you can see here on the daily how this is just exploding, right? To the upside. It is way overextended. We've got a gap. So the question is at some point, where do we come to retest? Right. That's what's got me that's what's got me, you know, thinking about, how do I want to ride this out or you know, just go ahead and close out and take profit if we good corrections to and just sit on the sidelines with cash. Right? So decisions. We'll see. Right? I expect it in the future, right? Even if a correction occurs, for them to continue to move to the upside, right? So with the market momentum and the positive outlook, right? Want to take a look at right Reese, this DJT, right? This Donald Trump stock, right? So I went through on TradingView, marked it up. It's a little choppy right now, but based on my top down and that last impulsive move to the upside and the correction, I've still got a 4-hour fib holding, right? So we've got a A6 retracement. We've got an inner trend line break. So what I don't know. What do you have on this Reese on this DJT stock? I know the balance sheet and the paperwork on this is not good. Uh, but it did gain some momentum, because of the election results, right? So uh, I don't know if you have the same thing, if you're looking at something on a much lower time frame for this stock. Uh, Same thing. I don't know much about it, but I figure why not, right? At least trading it. The financials behind it. I don't know what it looks like now with the election, but the reason why it saw a collapse is because the financial stink, right? right now. Um, so we'll continue to watch to see how that plays out as he comes back into the office and continues to enrich himself. So we will see, right? But as investors, if it makes sense and it picks up momentum and the financials improve over the long run, uh, we'll see. I'm gonna leave this mark up here and see how it plays out. But it is holding within an AB boundary. We did get an A6 retracement, so maybe we can get that 118 uh, for a take profit. So it's a momentum trade. Uh, so as a momentum trade, you know, it could be a good play. Like so. So maybe we work our way back to that 118. So that's how we're looking. That's how we're looking on trading. All right. So I wanted to make sure I got that covered for you because yeah, been meaning to do it the last few sessions. Yep, no problem. No problem. All right. So this is where we are. So this is like a lot of things that we have in a portfolio. You know, you got your SMH, your semiconductor ETF, and we posted it in the community, the portfolio. If any of you that wanted to take a shot on it, we had posted it some time ago. But it's up right now. It's got some good momentum to it. So we'll see, right? We will see what happens and how this plays out. But we've gotten some positive gains out of it. Look at this Euro USD play with the strong dollar. We know that we had this structure moving to the downside and then it pushed up. So this move completed and it actually formed another fib. Look how fast this is moving due to dollar strength, right? So this was the last fib. We pushed up a little higher. We talked about this last week. We pulled back to the edge of the sell zone, 50%, and then we moved back down. So we've got this level coming in here, which is a daily level, but the projection on this is actually lower, right? So we show our price here. So this is 105.99. But based on that retracement, we're expecting 105.25, right? On that. Okay, 105.25. We've got to continue move to the downside on this right now. Okay, so bearish coming into a key level. We did get a reaction at this level last time, so we'll continue to watch the DXY. But right now, we have to say dollar bulls are winning the day on this one. Okay, so continue to move to the downside. So the key is to watch. Do we get below that 105.99? Do we get some sort of a pullback and a retest for continuing to that extension? If we do, you may be able to get involved on that pullback. But that previous fib was pretty good, right? We went beyond, right, our zone, but if that stops above the A, it's gonna go our way as long as it doesn't hit it. Any questions on the Euro USD? All right. Anybody in the group, have you all started making plays, right? More plays on the indices, the ETFs, stocks, things like that? Yes, no, feedback? Yep. Okay. Okay. I know some of you were doing it before, even before you joined the group. We're trading. I know a lot of you were trading indices. So I just want to check, right? Because when you're not getting a ton of movement out of your currencies and things like that, you know, it gives you the opportunity to move on and find other things that are moving, right? It's reciprocal. It goes around and around and around, right? Here's this Euro Aussie play, right? It's kind of just been watching this one is just hovering, you know, at the lows. We all had the best data coming out of the Eurozone. But this is a deep correction. So I'm interested to see if this is going to hold Walmart and Kroger for options trading. Yeah, okay, I remember you telling me that. Yep. That Walmart, right? And we know Walmart and Kroger, they're not going any, right? And you're trading options, that's cool. They're not going anywhere, right? Maybe one day, Donnette, one day you should do a if you're doing you should put together a training for us and do an options training for the
Yeah, no
group.
problem.
Yeah, something to think about for the future, right? We
Yeah.
should do that for the group because I know a lot of people, especially a lot of people that I follow that invest, they do dabble in options, right? You know, sometimes as a hedge, you
Uh-huh.
know, to what they're doing, and so that would be good for the group. Yeah, that would
Yeah,
be
I'm
good.
still kind of getting familiar with Schwab, Think and Swim. So
Okay.
That's where we put it on, but that's what it
Yeah.
is. So I'm still trying to get familiar, much more, get accustomed to it.
Okay. Yeah.
But
Take take it. Take your time. Take your time, man. Show us the way. I know Ryan has dabbled in options too. I've never been a big options player, but I'm getting old now, right? So I'm starting to sit in things more long term. You know, my eyes aren't glued to the chart, you know, as much anymore, which is why I moved into building out portfolios and things like
yeah,
that. So uh yeah.
I
So
mean, I like it with Darwin, to put it in Darwin, to trade these in Darwin, because with options, you
mhm.
cannot, you have to manage your time, because in Forex, you can put it in and whatever time it gets there, it gets there. But in options, the contracts, you have weeklies,
Yep.
and, so you have to watch your time because you don't have that gauge of when the price is going to get there. So just a
Yeah.
time.
Yeah. Yeah, that's true with those dates. And so I think too, like me moving into it, I would definitely like the long term. Like put me way out. I'm gonna use a daily or a 4 hour chart, and I want that date way out there. I'm just gonna let it run. I'm gonna catch me a I'm gonna catch me a low price in the buy zone, and then I'm just gonna take it and let it run. So Schwab has a series of free options courses on YouTube. Appreciate it, man. Drop some sevens in the chat for that. Yeah, I see a bunch of stuff pop up. But you you always want to work with the most credible sources, right? That's why I know Donette is something that she works hard on, you know, and so definitely would love to see that happen, so yeah, Donette, I look forward to it. Some point, just moving around with the thinking swim stuff. So look forward to that. What else? I wanted to there was this pound Aussie, right? Is moving is this is another one, right, that I'm watching. Right? Because the things when things start to, as good as the Aussie has been, when things start to kind of flatline in China, I know that has impacted. So I'm watching some of these U-turns, these deep corrections and these U-turns on these plays to see if we can get breakouts on these some of these pairs. So I know I've been paying attention to this pound Aussie pair as we got a deep. Anytime I get a deep correction, on a 4 hour, on a daily chart, I like, right, when I can see price starting a U-turn, right? Maybe worth a shot there. Any other pairs, right? I wanted to cover those commodities and those indices today. Because I wanted to show everybody how they're approaching, right, those high levels, and we may see a correction soon, right? So just be patient. And the reason why I wanted to do that today is because sometimes when you listen to all of the market stuff that's going on and it's like buy is buying is buying is buying, sometimes we can get that FOMO and we jump into a position that's at a high price. You know, I made that mistake a little while ago, and I'm still paying for it with my Darwin because in my had a drawdown of like 12%, right? Right. And what's cool is I let them ride. I let them ride and they recovered, right? Which is why I'm up pretty good in this Darwin account. But that 12% drawdown, while I waited through that drawdown and let the trades run, ultimately I was right. But that drawdown is still sitting in there at 12%, right? Which is a killer, right? So which, you know, taking an investor approach, it was what it was. I was in them to hold them anyway. But one of the mistakes I did was I lost patience and I didn't buy at the optimal price, and I knew better. And because of that, I didn't follow what I knew. I ended up having to sit through that drawdown and wait it out, and that cost me. Right, that cost me. It actually cost me an allocation. So because everything else was good, but that drawdown was too high, right? So even though I didn't lose those trades and I ended up in profit, the active drawdown was way too high for them, right? So the beautiful thing that we have the ability to do is to trade sweet spots and just wait, right? So if you're waiting for setups and things like that on the S&P, wait for those low prices to come based on the principles that we follow, and you should be in pretty good shape. The portfolio that I'm trading now, one of the things that I did was I waited. I waited for some low prices on a lot of the things that I'm trading, and then therefore, it reversed and it's positive now, and I don't have the same drawdown that I'd had on that first run that I made. So just a few pointers there, right, in regards to uh, why it's important to stay patient and don't worry about missing out. Um, so here's this EA joy. Uh, this EA here, right? So this is the one I had looked to first, right? And how we're kind of sitting on this 4-hour zone. And then if we go to the one, right, we'll see that other play that we had, right? Which I didn't cover this part, where we had this 80-20 to the downside, which is what took us to this zone. So this was a nice play here, right? 80-20, and then it collapsed through 2 TP levels. So now what I'm watching is to see, do we hold in this AB boundary, or is this just going to continue? Right? Kind of hard to tell where everything's coming out of the Eurozone. So we'll see what happens. But I'm going to continue to be patient. 80-20 played out though, you know. And then there's UJ. And this thing is moving, right? So just a continued move, right? So we broke out of it. We broke out. We came back down into the range. I'm probably looking for at this point with that dollar strength for that to continue to move higher, right? We move sideways and it wants to revisit this level. What is this? It's the high on that 154.67. So thinking maybe we see that D extension, get hit without any further, pullback. So we'll ride off a 382 there. That's what I'm leaning towards on the UJ. And then this UCAD play, got to go over this one too. It's running, right? So you had the 80-20 as sloppy as it was. You had to pull back to a 50%, and it's just running long, right? So I expect that one too to move eventually to the extension. Here's the trend line break, right, that we had drawn up. Look at that. And how that just went and moved and broke. See how we pushed lower here, took it out, but then we came back and we rebounded. And so we got a new AB boundary and prices is moving up there. Right? So that's where we are. So dollar bulls are out. We'll see what happens once the market opens at 9:30, especially since the bond market was closed yesterday. Interested in seeing that. Pretty light day today in regards to the fundamentals. We do have some Fed officials speaking today, tomorrow. We've got CPI, I believe it was tomorrow, right? We said, hey, Wednesday throughout the rest of the week, we should see some volatility pick up with some key data coming out, especially here in the United States. So all eyes would be on that. Any other questions before we log out?
Nope.
No, we're all good. Hey, everybody, enjoy the rest of your day. Ryan is out of town on business, so I'll be with you all pretty much all week. So, hey, keep up the good work. Keep working hard. Accountability group tonight at 6 o'clock.
Yes.
All right. So accountability group tonight at 6 o'clock. They're always doing some awesome things in that group, putting their heads together, right, forming that synergy. So with that being said, everybody enjoy the rest of your day. And always remember, don't just count your pips, but count your blessings. Yes.
I guess we were starting to look at Elliott wave. So since
Oh
you're doing it all
yeah,
week, if you have any input to guide us, but that's something that Jeremy brought up. So we're just
yeah,
trying to clear. I mean, he read the book already. I'm reading it. So
yeah. Like the five wave and then the major correction. So it's the I always looked at it as it's still moving your ABCD waves, and then when you get to the top of that fifth wave correction, right, you get that ABCD wave back down at major correction. But that's gonna be interesting. If I have time and I could break away, I would love to jump in and see what you guys are talking about in regards to Elliott waves. It's been a while, right?
yeah. Well, I wasn't sure
Um,
if you had if you kind of, know a lot about it. So
yeah. Back in the day, I used to dabble in the Elliott waves because it was just so I was really trying to tie together, the ABCD, Fibonacci sequence, with those Elliott wave principles. you know, uh, Especially when you get that major, ABCD wave correction back to the downside, right? After the Elliott wave sequence tops out. So that's gonna be interesting. That's gonna be interesting. So
putting Jeremy
uh
on the lead for that.
yeah, for sure. If I could take away and get into one of those sessions, I will. Is that's starting this week?
We didn't really start per se. I think we just started talking about it, and he mentioned it on Friday that he read the book and he encouraged me to read it. So I guess we're all
Hmm.
reading the book.
Okay.
I didn't read a book, and then maybe next week we kind of usually on Fridays I think we have those deeper discussion stuff. But
Okay.
um, is he on, Jeremy?
Let's see. Did he pop on? End up popping that? No, he did not this morning.
Okay,
So yeah, yeah,
I'll
that's
talk to
gonna
him
be interesting.
about it when
There's some guys that I listen to, and they what is his name? Gregor. He comes on and he's a huge Elliott wave technician, but they bring him on, it's a couple times a month, and he goes over his Elliott wave sequences and things like that. So yeah, so let's see if I could definitely find time to jump in at one of those 6 o'clock sessions. I'll be more than interested to see,
yeah, I'll fill
and to
you in.
learn
I'll
more
let you
about it.
know when we sure. All right,
Okay.
I'll let you know once we're diving into it. But for right now, I think we're just reading the book to get an understanding.
Okay. All right.
I'll put
All right.
the PDF. I think there's a PDF, but I think he's using a physical book. So
Okay. Okay. Well, I look forward to it. Appreciate the heads up on that.
yeah, thank you.
You're welcome. Everybody, have a great day.